Hey guys, Blackwatch. I'm gonna go over just a trade recap this week, just the one trade that I took today. I wanted to go over Monday to Friday, just this week's PA on GU, but if I'm being honest, I just want to hang out with my wife, so I'm just gonna make this quick, and then I'm gonna get out of here. But I do want to get you guys something, so I'm gonna make this real quick, and then yeah, we'll go from there. But yeah, today I took a short on GU. Everything is based on like my daily bias. Like I've been looking to find shorts for like the last week or two from this daily supply zone. I kind of messed up though with this one. I full TP'd when I meant the partial, but it is what it is. But I'll go through it. I'll kind of show you. I took a loss trying to get into it a little early, and then eventually I got in. I wouldn't say it was a gamble, but I'll kind of talk you through my thought process. I basically had two POIs that I was interested in shorting from, and as soon as price tapped into the first one, I just smashed the order, and it just ended up taking off. Right, so even though I had like a higher up area, it wasn't by much. It was just above it, but it was more the extreme than the flip. So I took the flip, and of course it ended up working out. So I'll go over that stuff with you and kind of go from there. But just for the sake of let's see what we do. Let's just start on the daily. Right, so this is some of the stuff that I had marked up last time. You know, I talked about price coming into the supply zone, which is a monthly and a weekly supply zone. Obviously, we start to see bearish price action, and then we had these equal lows built here, and also gave us a little bit of demand. Now, again, I say it all the time, but if demand gets a reaction while supply is in control, what does that mean usually? Usually means that the reaction itself is either going to be liquidity, like it's going to be swept, or it has potentially taken something out, and then depending on how that level looks, no matter what time frame it is, because I use the same exact model for entries as I do POI selection, right? Now I know Alex likes to, a lot of the POIs he calls I think liquidity POIs, right? It's all the same concept, right? It's just demand or supply zones. I also like to find ones that sweep liquidity. They just tend to give the best reactions. So I'm just gonna, for the sake of being consistent across the board, I'm gonna go ahead and call them liquidity POIs, because I think it's a good way to put it, as Alex has put them. So you know what we have is we have demand giving a reaction while liquidity has being built on the reaction. Then demand failed, so this little circle here indicates that supply basically is winning in this battle, this reaction, or this interaction. And then of course, like this major supply zone up here is being held, like price is failing to break the highs over and over and over again. Even though we're getting these reactions from demand, which on an intraday level we can long this stuff, the overall picture still says to just short it, right? So we've had this, again, kind of like nondescript buy to sell wicks. We don't necessarily have to trade off it, but we just look at it to justify the reaction. Like, why did price come down here and then come up here and then stop? Why did price stop here and then drop? Yeah, there's buy to sell wicks here. Fine, whatever, right? Just mark it up. You'd be like, that's the beginning of my supply chain. Then price comes down, bounces off this demand, and then eventually that demand fails. And when price comes up, it uses that reaction as inducement, takes it out, and mitigates the supply chain. And then the supply chain kind of shifts order flow a little bit. What you can see is price has this little buy candle. It comes down, right, with these two sell candles, attempts to push up, fails to do so. You can see it pushes down, and then this wick right here takes out these two highs, right? So this becomes your liquidity POI for supply zone. So now you have supply and a supply chain and a liquidity POI. Price comes up. Again, price comes in, taps that supply zone just by here, comes down, fails to do anything significant. Price pushes up. Then again, what's it do? It takes out this high here, it takes out that high there. You have equal highs, and then you have a supply chain mitigation, and then you have again liquidity POI. So In this case, I have the wick drawn there. In reality, it's this entire candle that we get this reaction from. I'm going to turn that to a lighter color. And then, of course, after this POI was formed, what did it do? Again, we had that demand zone, reaction, right? Price built that liquidity, came down, took out that liquidity, and then that supply failed, or that demand failed. So once that demand failed, it again tells us that supply is still in control. And then from the internal range liquidity perspective, we have basically all of these lows are internal range liquidity. Typically, once the first couple ones start to go, like one or two of them, that's a clear indication that the rest are going to go. So you don't necessarily need to look for longs from these levels. You can play pullbacks, right? But sometimes the pullbacks come either from the demand zone or they come after the demand zone is taken out, right? So like in this case, came into the demand zone, you got a reaction, intraday play. The better trade came once demand failed, right? The better counter trend trade. And then of course it went all the way to the POI. Same thing here, right? Price came, well, not necessarily the same thing, but what you'll notice is that when price came into this demand, we got the reaction, there's intraday longs, and then price killed off the demand zone failed. Again, here, it just blew straight through this one, right? And then where's the best counter trend opportunity? After the demand failed, and then it pulls back. So, you know, you can expect potentially the same thing going forward. We now have this like little demand zone formed. We might get a little reaction. It might take the high or take some liquidity and then just continue downward, or it could just rip through it. You know, this particular bearish leg is pretty choppy. So there's probably a lot of liquidity within this, a lot of order stacking and that kind of stuff. So, you know, it's possible that we'll do one of two things. We'll just rip straight through it, or more than likely we'll just kind of continue maybe like this, where we'll keep getting some like pretty severe reactions and pullbacks, which is good because it gives us a lot of trading opportunity. Yeah, so now to get into today's trade, we have, again, this daily liquidity POI for part of the supply chain. We have this demand failure here, price pulled back into it, and it's been running bearish. Now if we go to the 4 hour, I'm sorry for the messy charts, I need to clean this up still, but hopefully you can still make out what's going on. So if we zoom in a little bit more on what happened here, circle it, and here, right? I think Alex talks about this zone in his video, but what we're looking for is we're looking for the justification. Why did price come up here and then just all of a sudden turn around and start taking out these lows? Like, why did it do that? Well, if you look at the POI that it came off of, we have a flip zone, right, where price pushed up, took out these equal highs, right? This is the liquidity POI. If we look at this a little bit more closely, we'll notice that price came into that candle just by a hair, right? Just wicked it, right? And that sometimes is all it needs. Sometimes it doesn't need much more than that. So price pushed up, price pushed down, right? We got a flip zone. This is close to the extreme, but technically mitigated the extreme. So the reaction we got to it was pretty severe. Price came up, we got an initial reaction. Price pushed down, but it failed to break demand, right? So then price pushed up, took out that high. So in terms of internal external range liquidity, again, this is your high, this is your low, this is your internal range liquidity. So that means your external range is right here and it's right here, right? So often what happens is sometimes price will just come take that external range liquidity out and then go the other direction. So we need to be aware of these things, which again, for me, the best counter trend trades come from the external range liquidity being taken out, which can also be applied to supply or demand zones. Like if supply is in control and the demand gets taken out, often the best place to trade a counter trend trade is not from the initial demand reaction, but when demand actually fails and then it pulls back. So here we get external range liquidity taken out here, which kind of creates this as our new low, kind of new demand. It's not the best, but it's our first sign or indication that price wants to trade lower, right? As soon as that high gets taken out, that's a valid demand zone, valid low. You can see here it gets wicked, gets taken out, and then when price pulls back, it fails to take out the high. Comes right into the supply chain here, and the price drops lower. Supply chain expands out to this level, and you can see there's a mitigation there as well. And this whole time we're taking out these lows, right? What you'll notice is that price came down, built this little demand zone, reacted to it, price pushed up, took out that high right there, so liquidity is gone now, took out this as well, mitigated that supply, and then that demand failed. Once that demand failed there, also took out, actually it didn't take that out. Right, so it built liquidity. All right, so let me do this. So at the time when I was looking at this level for shorts last night, so I did this during Asia session yesterday. I actually took an EU short as well. It went for 42R, but it broke me even while I was sleeping. I didn't follow my break-even rule because I took the trade like an hour or two before its spread hours, and then I was worried about Asia because it was ranging pretty hard. I wasn't sure if it wanted to trade higher, so I broke it even prematurely. Went to bed, and I noticed that it took me out. Well, first thing I noticed was where price was. I was like, oh shit, that's a big trade. I was like 40 something, or it was like, I think at that point it's probably 20, 30 R at that point. I was like, that's a big trade, this is gonna be sick. I went in, I was like, oh my god, it took me out for break even. But that's okay, because I came back to, I found an entry on GU. It's kind of good from there. I'll show you the EU entry after, but yeah, so price hit the supply zone, which again on the 4 hours, a nice wick, took out all this liquidity here, part of the supply chain, demand failure here, equal lows. There's a lot going for this trade to short it. 15 minute. You can see that price, these were the previous trades in last week. Price came into basically this V-shape recovery, I guess you would call it. Yeah. Basically a little, again, a lot of people don't trade it, and it's not a big deal. It's just something to justify your reaction from, right? Because again, I want to know why price hit this level and just pivoted. Why did it just come off this level and just drop? I need to know that. So if we look a little bit closely, what we can see is that again, where did price come through? Oops. Sorry, what am I doing? Right in the wick. Where does it come to? Right here. So if you'll notice, there's a window of imbalance. And basically all that means is on the bullish side and the bearish side, there's a level of inefficiency that runs through both sides, right? So here you'll see this wick, right? It stops, this wick stops here. What's in between? A little bit of imbalance. And then of course on this side, the wick, imbalance. It's a weird thing. I have no idea why it happens. I've got enough data on it to realize that often price will hit something like this and just go somewhere. So again, you don't necessarily have to be aware of it when you're trading so much as just when you look at this and you're like, what the hell did that react off of? You're like, oh, okay, there's a window of imbalance. So what you can do is you can basically just say that's a valid POI for a reaction. Again, you're not going to trade from it, so don't try to do that. Anyway, so now I've justified the reaction, right? Now that I've justified the reaction and I am in the higher time frame supply zone, I'll look for valid supply. I'm like, oh, or valid demand. I'm like, okay. So as soon as we took out this demand here, we basically chalked to the downside. And then if we turn on Asian session indicator, right? So that was clearly the high of New York. You can see New York took out London low, mitigated, not quite Asia low, but took out London low, swept that, and then took it. This is why like understanding where your session highs and lows are pretty important, because they're liquidity, right? So price typically will aim for them. Doesn't matter where you are in the market. It could be a previous leg from way left or way right, but even this one, New York again aimed for London low, right? Frankfurt open, took out Asia high before dropping. It's just data, just study it. but it does open your eyes up to the internal and external range stuff quite a bit. So, okay, so yeah, so prices come into this. I'm just gonna go to the 1 minute. I do have demand failure here on the 15. I also have basically, yeah, demand's just kind of holding within this level. It's kind of failing to break this low at the moment, even though it took out this low. So now we kind of need to see what happens. Like, does it continue lower? Does it trade higher? You know, we're not really sure yet. It's showing that it wants to run bearish. Higher time frame supply zone, mitigation of these levels, like this one right now. We'll see what it does. Let's go to the 1 minute. All right, again, I'm not trading Asia. I'm gonna turn this off. Just fast forward a little bit. You could probably even refine this. So that candle right there, right? You can see again, price is just holding it. Right? It's just building liquidity, right? If supply really is in control, then, you know, demand's gonna fail eventually. But I'd like to wait for demand to fail before I look for a trade, because it could just go off this and just run higher. But, you know, in this case, I think supply is in control. I mean, that's the reaction there. Then we start taking all these lows in here. So one thing I'm gonna do is I'm gonna look left. Right, I'm going to look left and I'm going to start marking up POIs. So again, we have that mitigation, part of the supply chain, and I'm just going to draw out my potential supply zones. Right, so there's one. Right, this is a reaction to that demand right there. Right. This also swept some of these wicks, not super sexy, but valid zone, part of the supply chain. I'm okay with it. And then we'll look kind of left here, see if there's anything else worth looking at. So here we had demand, right? Not much of a reaction, not much of a sweep, but you can see that that level itself gets swept. So this in itself right here is a valid level. I'm gonna take, so you can see here, it kind of built these little equal highs, these 3 little equal highs. See that wick took it out, so it's a liquidity POI, right? Now, if we also pay attention to the demand of this POI, would be probably this wick right here. Sorry, that supply, right? So here, this is where it fails. Before it fails, there is a little sweep. And it technically does mitigate that, but so what I'll do in this point is I'm just gonna mark them both up like this. Right. Clearly we need to drag them out much further. Oh, okay, well it already mitigates that and gives a pretty strong reaction, so I guess I should have rewinded a little bit further back. Yeah, and then you have POIs within this, but at the same time I think they get mitigated during Asia. We're not really trading that, so it's not really a big deal. I'm not worried about it too much. I'm just gonna see how price plays forward from here. Oh no, I didn't mean to do that. Bear with me, 1 second. Don't cheat, don't look. Don't look. Sorry. All right, let's try this again. Well, we already know it taps that. What I meant to do was to drag it out further. All right, so now if that is mitigated, if that's valid, it's good. But what I want to do is I want to drag out the potential supply chain, right, and see if something comes of it after the fact. But right now, again, we're waiting for session to kick off. It's still too early. So we're just studying price until we actually get to where we want to be. And we'll see. Okay. So we're approaching midnight. So I'm gonna midnight CDT, it's Texas time. Right, London opens about 3 hours from now, 2 hours from now. again, this whole time demand's just holding, which again is just building a crap ton of liquidity, right? Because after this failure and then these failures up here, that would indicate that supply is in control. So depending on how these levels are reacted to above, we're going to want to look for basically a confirmation entry. We just want to see price come into these levels and then go from there and see what's up. Now I think one thing we have to keep in mind is what? Let's just see what happens. I'll just keep playing for it. Alright, so demand finally failed. Here we're pushing London open. Okay. Slow. Jesus. Alright, okay, so now we have price coming into the supply chain, right? That kind of reformed here. So there was this level above. I think if price did come back to this eventually, we'll get a reaction. I don't know if we can get like a solid trade, but it should react to it. Here again, maybe this slight mitigation in here was enough for this supply chain to shift order flow. Here, this would still be valid, but this has potential. Clearly we got a strong mitigation there, and then maybe we just clean that up to that. All right, that's a little too exact, but anyways, you can see, right, this reaction as to that supply zone. So now the question is, where do we look for trades, and when are you in session? So depending on what happens here, we'll have to look for a price to kind of more or less give POI to trade from. So like if you're trading the session, what I would do is I'd look for any demand reactions and then failures. So here we have demand reaction, that's the failure. I would look for the initial reaction, which is this wick here, and I would look for a sweep and then any mitigations. So here, that's a sweep, that's a mitigation. And then here, this looks like this wick just takes out those highs, so I would qualify that as well. So if price traded into this, I would take that. Right, so we'll put one on, see if we get anything. Does not look like it. Right, if price were to come into these levels, I would just expect these guys to be liquidity. So just keep that in mind as well. Alright, so let's see. We'll leave this on. See what happens with some of these demand zones. So that's what that level. Looks like this is a reaction to this larger demand zone. So I got swept. So keep an eye on this. So this demand fails. I'm sure there's other trades in here that might fit someone's plans, but there's not too many that would fit my plan, so just keep an eye on it. As of right now, I think the best thing to do is probably just follow the supply chain and trade the extremes. Not worry so much about what is happening in the middle. Often that becomes liquidity. I mean, you can see this is pretty momentous here. So I think one of the better things to do is probably just trade the extreme. All right, here, there is always this. All right, so let's trade the flip, right? And I'll trade the extreme as well. Right, and there's nothing wrong with this if you split your risk or anything like that. Just, have reasonable stop losses and expectations, right? Okay, so that would have tagged us in here. Now the question is, where's my break-even level? Now I typically want to break even at the low that caused my pullback. Now that's pretty far. So that would be a little concerning, but at the same time, to fit my plan, that is what do. Okay, get taken out, so that's a loss. This one tags in, right? Drag that over, drag this over. And now overall, right, let's see here. I want to see demand fail a little bit though. Okay, so that's still untagged for now. Okay, so this demand fails. Right, so this indicates to me that this supply chain is good. It tells me that it's taking over control again after this bullish little push here, and we took that loss. All right, so now the question is, you know, what's valid in terms of trading opportunity? So here, right, this one's tough, right? There's a nice reaction. It sweeps out this kind of like these little sell candle highs. This is a sweep. This is also a mitigation of this. So we do have a slight supply chain continuation. The only issue for me and my trading plan is that I don't have, like, this isn't reacting off of much here, right? So that means I need to justify this reaction. If I'm not happy with what it's coming off of, then I don't trade it. Now, the issue with how I would justify this reaction, it would be that this basically is reacting to more or less this entire larger range here, and that to me isn't really clear, right? So what I'll do is I'll look for price to come into this level, if it comes into this level, and then just see if I can get into something else, right? Okay, so price just pushed in aggressively to that level, so I'd be cautious to take shorts from here anyways. This trade, this is tough. I maybe would break even here because this is technically a low that pushed price back into my trade, but more than likely it would have been this guy. Just trying to be as realistic as possible. So here, this is break even. Risk is off. Okay, that takes out that high. All right, so that would definitely concern me. I would definitely need to see demand fail here. Okay, good. All right, so demand's failed. All right. Now the question is, right, do I have a setup, right? I've hit this POI, I've hit that POI, I've hit this POI, and I've got a supply chain, I've got continuation, right? We swept that liquidity, this swept that liquidity, and then demand failed. So the real question now is where are my POIs? Got this one here, right? But I also have this one here, because what you'll see is that price reacted to demand on this one, right? You can see the initial reaction is right here. And if you notice what price did before it failed, that it took out that high right there. One of these, that one. All right, so now the question is, you know, where's my POI? Now this, if I have a large imbalance like this, I typically will use the range. It kind of depends on what the stop loss is anyways, right? So this is only 0.6. So I'm okay with 3 pips. So what I'm gonna do here is basically I'm gonna take this entire range, and it's only a 2 pip stop, right? So I can cover more area, and there's something that Phantom always says, don't be a prick for a tick, you know? And that just means, like, don't try to get the smallest stop ever to try to get into the trade and make the most money. Like, just get in the trade and then manage it appropriately. But if you miss the trade because you're being an idiot, then, you know, just don't do that. So anyways, what I would do is I would drop it short here, and then here, right? So you see, I've done this earlier, right? And I took a loss on the earlier one, but the risk is worth, or the reward is worth the risk, right? So you kind of have to take these risks. If they're valid and they fit your plan, just do it, right? There's nothing with trading wrong from the, or there's nothing wrong with trading from the extreme, but also these flip zones are very valid. So let's just see what happens. Okay, so right now we've just built some liquidity. It hasn't tapped the POI. It's still valid, right? But if price starts to pull away from us, we'll have to, you know, basically be aware of that. So here, right? We get tapped into. And then where's the POI, or where's the level that I can break even on? It's gonna be this guy here, right? Break even. So I won't break even until we break that. So now this trade is broken even. This one, I'll leave it on for now, but we'll see what happens, right? And the price just starts to drop. Now the question is, right? This trade would be broken even, potentially here already. So we've got that one going. This one I'd probably take off, and then this one we're broken even as well. Running 13R. You need to look at the 15. We need to see what we're looking at in terms of POIs. Now we have these 4-hour equal lows here, right? We know we're in the daily supply zone, and we're expecting lower prices. Where's the best place to close the trade? Right? It's probably going to be these equal lows, honestly. You also, below the equal lows, you have a very clean 4-hour demand zone right there. Probably use this sell candle. 4-hour candles, I'm usually a little bit more vague with the area, just because it's an area and I need to be aware of it. So at the moment, we've got 2 trades running. Right, I've taken one loss. Right, broke even on both. Risk is off. If there's another setup, I don't know. I'm not gonna really get into it right now. This is the trade that I took live. This is the loss that I took live. I didn't take this trade here. So just so you guys are aware, when this trade started to run, right, 1% full volume, right, consistency, that's all that matters. Now, the only way you're going to get to that level is if you just practice doing the same things over and over and over again, right? And you're okay with taking certain risks. Like I took this risk on the flip zone, it traded the extreme. I took this risk on the flip zone, it traded the flip zone, right? It could have easily gone to the extreme just like it did here, but it didn't. Because I know that sometimes it does, sometimes it doesn't. But again, it's worth the risk. If everything else is lining up, just hit it, right? Don't be too afraid. Right? And if you're over trading and you're taking a lot of trades and that kind of stuff, then you know, you probably shouldn't be trading live anyways. Develop a plan that you can trade over and over and over and over again. And there's TP. For 40R there. This one would have been nice 34R, right? But that is all you need to do. Now, obviously, I made it look easy. I've gone over this PA, you know, I recapped my trade. I took this live, you know, so it's like when you're trading something consistent and you're doing the same entry models over and over and over again. I mean, if you look at Brad Wise's last 2 EU trades, you'll think that they're the same exact PA. Like they're exactly the same trade over and over again. Same with Tricky. Like all his trades, they're exact same trades. Albert's trades, they're all the exact same thing. And that's what you need to figure out. You know, it's like, it's kind of like, I think I said it in the last video, you know, if you were to take like an artist or a musician or whatever, and you were to try to mirror them as you were learning because you wanted to be a musician or an artist yourself, you find somebody that you gain influence from and you do your best to imitate. And then eventually you start to develop your own style, right? You see things your own way. It's the same thing with trading. You know, just keep working towards consistency, break-even stuff, trade management stuff, where you TP, how you get into trades, how you do your higher time frame analysis, how you pick your POIs. All of these things should be very, I don't want to say straightforward because it's not. Sometimes the market's very vague, but there should be some level of consistency in how you do certain aspects of your trading, POI selection, entry, management, etc. Anyways, I'm going to run. I'm going to edit this up real quick and shoot it online. And then, yeah, I hope you guys have a great weekend. And we will catch you on Monday. Awesome. Have a good one.